Sailesh K, he's head of Asian strategy at SEB in Singapore. Thank you so much for joining us, Sailesh. First up, this is what you have at the moment in terms of your outlook. Thunder before the calm. Tell us about that.
Well, we think that basically the markets run quite a bit in terms of equities, foreign exchange, and risky assets overall in Asia. And so the short term, we're a little bit cautious because we just like to see a bit more details on the Greece restructuring as well as what's going to come out of the banking sector in Europe in the first quarter. So we're looking for basically better entry levels into the currency markets before we basically go outright long on Asian currencies against the dollar. So we're looking to buy on weakness. That's the key conclusion of the report, because I think essentially what has happened is right now the macroeconomic situation in Asia is for improvement. The risks are tilted to the upside in terms of growth in our assessment. And essentially investors have been fairly light on Asian currencies and stocks and have been very much in terms of asset allocation in cash, one of the highest in several years. So with the data having turned and being too short the risky assets, that's the reason why we're getting this nice rally in risky assets in the first month of the year. And the short-term outlook, we're negative, but like I said, we're looking to buy on weakness.
Sailesh, well, I was talking to Arno van Hoorn from Robeco earlier. He was saying that what surprised him is the amount of capital inflows from Europe and elsewhere back into this part of the world after the deleveraging that we saw at the end of 2011, saying that these funds are the key driver when it comes to Asian equities. And also, at the same time, we saw equity markets here taking an absolute beating last year compared to the rest of the world. So valuations, of course, compelling. But how does that play out also when it comes to the foreign exchanges?
Well, it's similar, I mean, basically what we got in the second half of the year is Asian currencies started depreciating against the dollar, even though the overall macroeconomic situation, what we had been calling throughout the second half, is not as bad as the market was anticipating. And so people, I think, to a certain extent panicked. And secondly, some of the assets which were out of the money in the developed world, like in the United States and Europe, they had to be basically funded by in-the-money assets here in Asia. So there was selling pressure in the foreign exchange and equity markets in my assessment. And we end up in the beginning of the year, and lo and behold, we had pretty good China GDP number, and we basically had some nice high-frequency indicators coming out of Korea as well. And people are like, well, maybe things are not as bad as we thought in Asia, and we're light in terms of positioning, in terms of Asian risky assets anyway. So basically it's time to buy and, allocate some of that cash into basically more productive investments, such as stocks and currencies. I think that's what's going on currently.
Sailesh, of course, a key number out later on today. Okay, it is backward-looking, but nearly all data are. Let's talk about Q4 GDP out of the US. This is going to be a key indicator, perhaps, of momentum for the economy, perhaps. But tell me something. How does that play into your favorite trades?
Well, the thing is, the GDP number tonight in the United States will probably surprise on the upside, given that high-frequency indicators, most of them over the last 2 months, have been fairly positive. So what that means is, for the near term, we continue to probably get support for risk sentiment and towards risky assets in Asia. But I think we're kind of coming to an end in terms of the euphoria that we're seeing in the equity and currency markets, at least for the near term. And we think essentially that the Europe-related risks, as far as Asia is concerned, in terms of hitting the asset markets, are on the horizon in the first quarter. Once that materializes, those shocks that come through, maybe potentially final shocks, then is the time, we think, is to buy some of our favorite currencies, such as Korean won, Indonesian rupiah, and Singapore dollar, on that weakness. We also think essentially that CNY is going to appreciate against the dollar much more than what the market is currently forecasting.
Sailesh, great to see you as ever. Sailesh K from SEB joining us there from Singapore.